Hey everybody, hope you're all doing well. It is Wednesday, May 1st. I'm making this video just after the close of the markets today. And I had a pretty decent day. I made about $500, nearly $500. Let's see, I got like about an 8% P&L. Let's have a look here. Yeah, 8.64 P&L with $281 of profit on Paramount, $212 of profit on Apple. And yesterday I actually lost money. I lost a couple $100 yesterday, so made that back plus a little bit more today. But it's been a pretty uneventful week, honestly. I've been sizing down because anybody that follows the market could have expected that these first few days would have been really pretty wild. A lot of up and down, choppy price action. You've had so many different companies reporting earnings, and you had the Fed meeting today that concluded with Powell's speech. And his speech was basically like what seems like most of his recent speeches are like, which is saying the economy remains strong, but we're still not where we want to be as far as getting inflation down. So he's always kind of like looking for this Goldilocks type of vibe that we never seem to get to. And it's honestly pretty frustrating, but it is what it is. And you just gotta, you gotta play the chart as you see the chart. And that's why I always say, don't make any moves based on what you think is going to happen next month or next week or even in the next few days. Make your moves based on what you see on the charts right now. And it also kind of like made me want to do this video today because when I was thinking about Powell's speech and kind of always looking for this sort of Goldilocks zone of just right, I thought you can relate that idea to your actual trades, and it's smart to do that. And I'll try to unpack all this as I go. Obviously, I'm not reading a script, and so I'm just kind of freestyling this off the top of my head, which is what I always do. But basically what I mean by this is you want to have a sort of Goldilocks zone in your trades, meaning you want to get the most out of what you can afford. And based on what you can afford, that will help determine exactly which stocks you trade, which options contracts you buy, and how many, like what size you can play with in relation to those particular contracts. Hey, check it out. We've got a duck. We've got a duck that wants to learn how to day trade. What's up, duck? You want some advice? Come on over and get some. Okay, anyway, back to the program. Oh shit, there's another duck right here. Look at this. What's up, little man? Where you at? Oh. Where you at, little guy? You want some trading advice? I've got it. Make sure you like and subscribe, ducks. All right, so now we're back again. I'm going to try not to get distracted by all the duck action over here in the park. But anyway, so what I was talking about was like, okay, say you've got $2,000 in your trading account. So that's the total amount of money that you have to trade with. And you have a cash account, which is what I recommend everybody get, is a cash account. Because if you don't have a cash account, then anything more than, I believe it's 2 or 3 day trades per week, you're going to get flagged with the PDT rule. And you definitely do not want this because that's a whole nother can of worms that you've opened up, and you definitely want to do more than a couple of day trades each week. So you should get a cash account, which means that everything that you're trading with is your own money that you actually have. So for example, you've got $2,000 in your account. That means that's your money, that's your cash money. You've got $2,000 in your account, and you can trade with that. You can trade 100% of it every day if you want to. And so with that $2,000, let's say that you like NVIDIA because you've heard plenty of talk about NVIDIA, and you think, oh, that's, I want to trade NVIDIA. That looks cool. Everybody says NVIDIA is great. Let me go trade NVIDIA. Then you go look at the options chart, and you realize that one at the money contract for NVIDIA will cost you about $1,300. Now, sure, you could buy one contract for $1,300 on NVIDIA, but that's it. You've got one contract. You've got one chance to get it right. You've got one in and out because you only have $2,000 total in your account. And, so if one options contract costs $1,300, that means you can only afford one contract. But there are plenty of other tickers in the tech space that you can trade that are a hell of a lot less expensive. Like, for example, MU or AMD or Intel or Microsoft. You can look at any of those tickers and you can find options contracts that are around at the money prices for $100, $200 per contract. And so now you're talking about, let's say you've got a $200 per contract at the money strike price on AMD for this week's expiry. That means that with your $2,000 cash account, you could get 10 AMD contracts if you wanted. Now, I definitely would not advise you to go 100% of your total trading account with each trade. That's kind of reckless. So you wouldn't want to do that. But theoretically, you could do that if you wanted. And now, instead of having one in and out, one chance to get it right, you've got 10 chances to get it right. And so you can do a better job of scaling in and then scaling out. So what I mean is, let's say you do some pre-market analysis and you think that it looks like it's going to be a green day on AMD. And then you get 15, 20 minutes into the session and you see a trend start to form. Like, for example, maybe AMD was below the 200 and then it broke up above the fastest EMA on the alligator, which broke above the 200, and then it kind of came back and it bounced, it touched, it bounced off, and you said, okay, this looks like a good chance to get in. You can get in with one or two contracts, and then a few minutes later, if it looks like it's really taken off, you can add in. You can get in with a few more contracts. Maybe you close out a couple of your contracts, it retraces a little bit, you get in a little bit more, and then it bounces back up. You ride that and you scale yourself out. So you scale in and you scale out with the total amount of contracts that you're playing with, and that gives you more leeway to not have to be perfect. Essentially, if you've got one shot to get in and out, you have to be more perfect with your entries and exits in order to maximize your profits. Whereas when you have more ins and outs available to you, you don't need to be as perfect with each in and out. I hope that makes sense. But you also don't want to go too far in the other direction, meaning you don't want to say, oh, well, if I can buy 10 contracts of AMD at, $200 a contract, let me get this penny stock, and then I can buy, 100 contracts that each cost me $5 a piece, something like that. that's not really a good idea, because when you start talking about penny stocks, you need a lot bigger move in your favor in order to actually maximize any sort of profits. So like, the higher price you're dealing with on your underlying stock, the more a little bit of a move really goes in your favor. So if you're trading the $1,300 NVIDIA options contract and it goes in your favor just a little bit, you've suddenly made a lot of money. But you can also lose a lot of money very quickly going in the other direction. So it's kind of more high risk, high reward sort of activity when you're dealing with a higher priced underlying stock. But if you're talking about like penny stocks, you really need a hell of a big move with a lot of contracts in order to actually make any decent money. So yeah, you can do it. If you just want to get involved just for kind of practice, it's definitely a good idea to just practice with penny stocks, because then you're able to actually do the activity of trading for real. Like, you're not doing paper trading, you're actually trading real money, real contracts, but you're risking a lot less as you do this. So that can be a good idea if you're just starting out and you're like an absolute beginner, but you just want to get into the process of day trading options. Then yeah, trade some penny stocks just to do it and to get the experience. But once you actually know what you're doing and you're trading for real and you're really trying to make money every day, I would advise against trading penny stocks. So to kind of bookend the whole video, we're talking about the Goldilocks effect here of maximizing your own account and trading with size that you can deal with, so that you don't have to have such a big move in any direction in order to make you some real money, and you can still buy a multiple amount of contracts and not just have one contract that you're dealing with. So hopefully this made sense, and I think the end of this week should hopefully be a little bit more relaxed than the beginning of this week. There's the jobs report on Friday, so who knows what that's going to do. But like I always say, when you just trade in the now and you just look at what's right in front of you right now, you've got a lot better shot of being able to predict where price action is going to go, rather than trying to predict where you think price action is going to be a month from now. And that's why I day trade and I don't do longer term investing or swing trading. So that's it for now. Until next time, good luck, trade smart, don't trade scared, don't trade greedy. And if you haven't hit the like or subscribe button, make sure you do that. I feel like I would be neglecting my duties as a cheesy YouTuber if I didn't say like and subscribe at least once in a while. And I don't think I've done that in the last couple of videos, so do that. And I'll see you soon. Bye-bye.